All right, hi everyone. I hope you can hear me. I suspect you can hear me. Okay, so welcome and thanks for showing up. We truly appreciate all of you taking the time to join us. Before anything else, thank you. Before anything else, a huge thank you to NinjaTrader for organizing this event and for giving independent developers like myself the chance to share tools and ideas with the trading community. So, as I was saying, a huge thank you to NinjaTrader for organizing this event, for giving independent developers like myself the chance to share tools and ideas with the trading community. That's what it's all about, digging into into real market mechanics and helping traders grow together. That kind of openness and support is rare, and I'm grateful for it. So I'm Max, founder of TradeWise Creations, or TWC for short. We're not going to rehash the full history of TradeWise Creations. We covered all of that in our first webinar, which focused on divergence and how to spot them. Just know this, we build tools and algos for futures traders who are just looking for a little edge in the market. What really matters today is the last milestone right here. So, the launch of our single print algo. It's something we've spent a lot of time building, testing, and refining in live markets. And later in the session, we'll show you exactly how it works and why we think it's a game changer. So if you're curious to know more about TradeWise Creations or the products we offer, feel free to check out our first webinar on divergence. It was a really, I think, interesting topic, or even our website. Here it is, TradeWise Creations. My sister says that my backsplash here tells people that we sell suits, but yeah, maybe I'm due to change that picture. Okay, so we've got a solid session today. Let's dive straight into the good stuff. Today's topic, the single prints. So how to see them, how to use them, and how to love them. Before we get into the real nitty gritty, let's do a quick refresher on what actually moves the futures markets. If you really want to understand how futures trading works, forget the noise for a second. Strip away the indicator, the setups, the fancy chart patterns. What actually moves the market? It's simple. It's buyers and sellers disagreeing on price. That's it. Every tick, every spike, every collapse you see on the chart is the result of one thing: someone deciding to buy while someone else is willing to sell. The price moves because they don't agree on what something is worth, and they're fighting to find out who's right. Think of the futures market like a massive 23-hour a day street market showdown. It's loud, messy, and brutal. Buyers are shouting, "I'll pay $11 for that contract." And the sellers are saying, "No, unless you give me 13, unless you give me 13." When they meet in the middle, boom, a trade happens at $12. Then the next fight starts immediately. Sometimes buyers get aggressive. They chase prices up, hitting every seller in sight. Sometimes sellers panic and start undercutting each other just to get out. That's what creates momentum. That's what causes pullbacks. Every candle you see is the trail of that constant battle over value. Okay, so the real drivers: hedge funds hedging billions, institutions making moves, retail traders chasing momentum, both bots reacting to volume shifts, and the old faithful duo, fear and greed. Okay, so news doesn't move the market. Reaction to news do. Indicators don't move the market. Um, um, People reacting to them do. So the only thing that ever moves price is someone hitting the buy or or sell button with conviction. Um, so if you want to understand futures trading, don't just learn to read charts. Learn to read the fight. And this is what this whole presentation is about. It's the fight. That's where the footprint chart comes in handy. Ladies and gentlemen, this is the fight right here. You can see it on these charts. In a footprint chart, each price level shows two numbers side by side, right? So 0, 170, 218, 288, 221, 124. The left side represents bid volume, meaning the number of contracts sold at the lowest available price, usually by urgent or aggressive sellers. The right side, so where you see, let's say right here, 1, 44, 45, 34, 7. Okay, the right side shows ask volume, which is the number of contracts bought at the highest available price by buyers who want to enter quickly. This structure, pardon me, lets you see at each price level who is taking the initiative, buyers or sellers. Okay, so the footprint charts or the footprint chart gives you the ability to feel the pulse of the market. You're not just seeing price bars, you're seeing the actual battle between buyers and sellers at each price level. It's used by a lot of experienced traders and it works across any market. So stocks, forex, futures, crypto, you name it. It's great for day trading. It's great for swing trading, even long-term setups. And well, there's different styles of footprint charts, but we focus on the bid ask footprint, the one that shows how many contracts were actually bought or sold at each level. Not passive bids, not passive bids and asks. No, real executed trades. So it tells you who was active and where they stepped in. Let's take a minute to look at this side-by-side comparison. Let me show you. Let me swing. There you go. Okay. So on the left, we've got your standard candlestick chart. On the right, we've got the footprint chart showing the exact same moment in the market. That's important. So these two graphs are showing the same thing, the same moment, same day. Now you'll notice I've drawn two horizontal lines on each chart. Same placement. So these lines are at the same place, same price levels. But here's the key. Look at those lines on the candlestick charts. On the candlestick chart, sorry. What do you see? Not much. So the first line, they're right in the middle of three candle bodies. No wick rejection, no clean reversal signal, nothing that jumps out as important. If you were trading with just candlesticks, you'd probably scroll right past that level without a second thought because it looks completely random. There's no clue there's anything special happening. There's no way to catch, let's say, this drop right here. I don't know if you can see my mouse here, but there's no way to catch this drop because this line is going through, like I said, three candle bodies. Okay. Um, sorry. So now let's turn to the footprint chart on the right. So right here, this is the same line at the same place. So now let's turn to the footprint chart. Same line, same price levels, but the story's completely different. Here you can see the battle. At those exact levels, you've got huge volume being traded. Buyers and sellers are slamming into each other. Aggressive buying at the ask, aggressive selling at the bid. The market is trying to decide who's going to win. This is where the actual struggle for control happened. Not at the tip of the wick, not at the open or the close, right there. You can see it. It's in yellow. It tells you where most bids and asks were. So you can see this line crosses right through this 138, 217, this 367, 380, and just underneath 266, 250. So this is the real place. This is where the fight happened. If you look at this chart, it just goes through three candlestick bodies. Here, it goes through exactly where it's supposed to go through, right through the fight. Okay. So the market is trying to decide who's going to win. This is where the actual struggle for happen control, not at the tip of the wick. So in the middle of the zone, that looks so boring on the candlestick chart. Okay, and here's the punchline. Price respected those levels. It either launched off them or completely rejected them because those were the real support and resistance zones. The levels were where traders actually fought for position. Okay, on my last webinar, I didn't look at the questions. Any questions? No, I think I'm doing good. Okay, you guys are still following me, right? I'm just waiting for all good. Thank you. Okay. So that's what the footprint reveals. It shows you the why behind the move. It exposes the fight, who stepped in, who got overwhelmed, where the market turned because someone said enough. Okay? That's what the footprint reveals. Candlesticks just show you the outcome. The footprint shows you what it took to get there. And if that wasn't enough to convince you to use the footprint also shows the candlestick. They're right here on the left. I don't know if you can see them. So this is the green candlestick, and then the black one, and then the red one. So you've got the same thing here: the green one, the black one, and then the red one. You can clearly see where it opened, where it closed, up to where it went. So you do have the candlesticks and you have the wicks as well. So if you're scared to, I don't know, to miss out on the candlesticks, you still have them on the footprint, right? Okay, so this brings us to the single print. So a single print happens when price moves quickly through a level and never comes back to trade there again during that session. It's a sign that the market moved so fast, there wasn't time to build any structure or interest at that level. No back and forth, just a one-time pass, just a one hit and then moving away. In a footprint chart, you'll usually spot a singles print as part of a finished auction. Maybe this is how you know it. Finished or unfinished auction, exactly like what we talked about. You'll see a price level with zero activity on one side. No one lifted the ask. No one hit the bid. The market poked into that price, found nothing, and left. No one was interested. So these single print zones often act like magnets or barriers later on. I don't know if there you go. That's right. So sometimes the price comes back to repair them. Other times they become strong areas of rejection or support. But either way, they're valuable because they mark areas where the market said that was a mistake. Like, well, let's not go there again. We're not doing this again. We're not hitting that place again. Do the bars on the footprint repaint? Repaint. I'm not sure I understand that. I'll get back to you. Okay, so what makes them so powerful is how few and far between they are. Most of the time, price hangs around at a level, tests it, and comes back. But when you get a true single print, just one clean touch and gone. It's telling you something. It's telling you that something happened here, a real imbalance, a real decisions, a real decision. We don't like this spot, so we're going to move away from it. Moving away from it very quickly could mean a good trade for you. Okay, so if you can spot those areas in real time, you're not just reacting to the market, you're reading its intentions. For example, if you see 0 on the left and 170 on the right, like right here. I don't know if you can see. I hope you can see the numbers. I hope they're not too small. But on this top candlestick here, on the left it says 0, on the right 170. Yes, absolutely, Jean-Dominique. The color will change depending on who has the upper hand. Absolutely. Um, okay, so okay, so if you have, say you have 177 on the left and 0 on the right at the bottom of a candle, or sorry, I'm gonna say this again. I was caught off guard. Let me do this again. So on the left you have 0, and on the right you have 170. Sorry for that. So at the top of that candle wick, that means 170 contracts were sold into the bid, aggressive selling, and no one bought at the ask. That's rejection. That's more than rejection. That's exhaustion. People don't want that. Price went up, found no willing buyers. No one up there was like, yeah, I'll have a taste of that. No, they wanted to have nothing to do with it and turned back down. Boom. Went right back down. So if you want to catch this nice drop here, this 15 tick drop, you have to see that rejection. You have to see that exhaustion. You have to see that no one is interested there. No one. Okay. So flip it around. I've got another slide for you. So at the bottom right here. So that was the example. So say you see 177 on the left and 0 on the right at the bottom of a candle. That means aggressive buyers lifted the ask and no one was willing to sell lower. No one hit that bid. That's a strong rejection to the downside. Okay, so and the price likely bounced from there, and that's exactly what it did. So if you want to catch that nice lift here, if you want to catch that elevator right here, then you have to be able to recognize this exhaustion, this rejection, this pure rejection. No one in front of them was there to lift the ask. Okay. So these are the kinds of finished auctions that become single prints, and they're what we watch for. So you can stare at the footprint all day, and yeah, you'll spot them eventually. By the time you react, though, the opportunity might already be gone. That's where, in all modesty, our tool comes in. So we built, I don't know if we have it here. Okay, so yeah, the TradeWise solution, single print algo. So we built an algo that does exactly what we've been talking about. It detects a single print as it's forming. And if the conditions are right, it instantly fires a market order. So no hesitation, no waiting around for confirmation. If the market leaves without it, it lets it go. Simple as that. We are not chasing. So this isn't a black box. It doesn't chase trades or try to be smarter than the market. It just reacts faster than a human ever could. And it only reacts to one thing, a clean single print. Oh, Jean-Dominique, is your chart 1 minute or does it matter? Yeah, it does. Usually for our algo, we put it on 5 minutes. That's what we usually set it on. I now better understand the importance of the footprint chart compared to candlestick. Thank you very much, Val. Absolutely. I was kind of I was very happy to. I don't want to sway. I don't want to say to switch from one to the other, but definitely use both. This is what I did. Thanks, Val. Okay, so it reacts to a clean single print. That's why we built it, not to predict the future. No one can. Just to catch a very specific moment that happens rarely, but means a lot when it does, right? So we use it ourselves. This isn't just some tool we put out there to make noise. It's a precise piece of machinery that handles one job, and it does it well. if you've ever missed a reversal because you were still thinking about it, this is the kind of tool that bridges that gap. Our single print algo was built to give you one thing: high quality, high conviction signal. At the moment, there is a strong single print. That's it. The kind of moment that shows up right at the heart of a market reaction zone, not after the move has already happened. It's designed to help you step into that trade with confidence when the setup is there. But how you manage the trade after that, that's where your role comes in. This is a semi-automatic algorithm. That means it doesn't trade for you from start to finish. It doesn't manage your position. It doesn't move your stop. It doesn't take your profit. What it does is highlight the moment there is a strong single print where the odds are in your favor. And then it takes the shot from there. It's up to you to make smart decision based on what the market gives you. Um, do you set a minimum number of contract for it to fire? Mike, that's 100 up. That's 100% up to you. You can trade it. You can use the algo like you normally trade. If you trade with one contract in the ES, then do the same with that algo. The only thing you have to understand is that that algo is just a robot that is looking for single prints. That's all it does. Where we feel that we have the advantage, when we feel when there's a rejection in the market, then our algo kind of spots it, and then it kicks in with a market order, and then you're free to handle it any way you see fit. No, the number in the footprint. Yeah, absolutely. Absolutely, Mike. Sorry. Yeah, you can set it like in the for the ES, a very good number for single print is like 100, 120. That at that point you'll get a strong message, a strong reaction. You'll get an exhaustion and you'll see a real move in the market. So absolutely, Mike. We put it at about like 120. I'll write you 120. There you go. Um, okay, cool. Thanks, Mike. Um, okay, so now let's talk about how to use it properly. So if you're trading with an ATM strategy, we strongly recommend setting a super tight stop loss. Okay, so that's the whole point of this algo. It finds a cool place in the market. It's supposed to bounce right from that point. If it doesn't bounce right from that point, then you're just chasing. Okay, so you put a super tight stop, maybe a 2 or 3, and you let it work its magic. It should bounce from that point. If it doesn't, you let it hit your stop and you move on to the next best thing. All right. The whole idea behind this algo is precision. You're entering at a moment there is a strong single print right where the market shows signs of imbalance and potential reversal. If it doesn't hold, you're out. No need to stay in that trade. That's not working. Keep your risk tight. And this advice is good whether or not you use our algo. Like I really hope you guys use the single prints to trade. You don't need my algo to find the single prints. If you're able to see them well in the market, then also put a very tight stop loss. You don't need my algo to find the single prints. If you trade on your own, you'll also be able to do it, but I have the same advice, a very tight stop loss, okay? Okay, so at the same time, give your take profit some space. So if your tight your sorry, I'm sorry. If your stop loss is very tight, your take profit should have a lot of room to breathe. When the trade works, it works well. When the trade works, it usually works very well. The kind of move that doesn't just go 2 or 3 ticks, but can stretch to 10, 15, 20 ticks or more. Let the trade breathe. So let the imbalance resolve itself. So you're not trying to scalp noise. You're trying to catch a response to a key structural moment in the market. So again, the algo helps you identify the moment. There's a strong selling single print. That's the hard part. But once you're in, it's your job to manage the exit based on your style, your risk tolerance, and what the market is doing in real time. Okay, so this tool isn't a magic button. It's not a robot that replaces your thinking. It's a weapon, and like any weapon, it's just as good as the person using it. I think I have a well, so here it is. So it looks like this. Pay no attention to these numbers right here. They mean absolutely nothing. So this is where you choose how much. Well, Mike's question, he asked it so well. Like how many singles you want. So here you can put like 120, depending on the market. You can put 120 on the ES. We found that 120 works very well. So this is the algo, and I think I have. Oh, okay. I'll put pause. I think I'll show you a video of this algo working its magic. Hold on, easy. So it just caught an imbalance. I don't know exactly where. I wish I had a better video. I hope you guys can still see it. What is the type stop loss in ES or NQ? Marek, I'll tell you. NQ, I have no idea. I don't trade the NQ. I find it very difficult to trade the NQ. On the ES, I'd put 3, maybe 4. I think on this one, I have it at 4, and it hits just underneath. So watch this video. You'll see this is a good example of how the algo works. So I think I want to see it fire. Yeah, okay. So it fires. It sees that guys, I'm so sorry. Hold on. Give me a second. So at the top here, there's a single print. So I think it's 127. I'm sorry that the quality is not so good. So 127. So it fires a market order, and okay, I'll let it play. I'll let it play. And then as you can see, there's a rejection almost right away, and then you can see it. This rejection leads to a strong force on the other side. Boom. Think I'll let it breathe a bit more if I remember. And that's it. You see? So strong rejection at top here. Let it give it some room to breathe. And then we did like, I don't know, like 15 ticks, right? So this is how it works. What is a tight stop? Okay, that's the same question. So yeah, Marek, very good question. NQ, I don't know. ES, like I said, 3 or 4. It's there that it's supposed to happen. If it's not, then you should move on, you know? Um, Okay. That's it here. Yeah. All right. So, like I said, my name is Max from TradeWise Creations. We at TradeWise really proud ourselves most on our customer service. We're easy to reach and always happy to help. Whether you just want to chat or need technical support, we've got you covered. So Discord, just join us there anytime. Join us right away if you want to. So this link is still good. YouTube, so we post helpful content regularly, especially about no, I'm going to take that back. We post helpful content. I said regularly, it's not true regularly. Every time we have a new product, usually we try to post some videos to help everyone better understand them, because we're always very happy to launch new products. And you're always welcome to drop questions in the comments, or visit us at www.tradewisecreations.com for more info, and feel free to use the live chat. All right. So I hired my sister to answer anyone who has questions on the chat. So if you go to www.tradewisecreations.com and you want to chat with us, there's a chat box right there, and we'll be more than happy to help you guys. Hold on, there's a questions here. The algorithm will always be faster than a human when it comes to entering a position and detecting single prints. Yeah, it will, Val. I share your opinion. I'm absolutely not saying that you need our algo to detect single prints, but it will certainly you'll certainly get into the market faster than if you were doing it on your own. Like I said, I'm not saying that you need our algo to use these single prints, but it will be quicker. Joseph is asking how many trades per day. Joseph, that's a very good question. Sorry. I would say because usually, all right, I trade between 9:30 and 11. I'd say that it fires like three times at 120, 150. 150 is you'll get maybe it'll fire once. At 100, 120, it'll fire maybe twice. If it's under that, then maybe three or four times. But this is always your bet. It's do you want it to fire often, or do you want it to fire rarely and then find a real opportunity? Do you offer a trial, Stephen? Of course. I should, all right. So I say here that we have a 20% discount. We actually have a 100% discount at TradeWise Creations. I think it's one, two, three. I think that's our promo code. Okay. I'll even write it promo code 100% with 3%. And um, you can use this promo code and try any of our products on our website. All the algos, you can try the indicators, you can try our dome, and I'll give you as long as you need to figure out if you like it or not. And I'm serious. If you need 2 months to to understand or to know if you like our product, then you can take 2 months. So if right now you take this promo code, you can go on our website right away, use this promo code. We won't ask for a credit card. We won't ask for anything. All I need is your name or your fake name if that's what you want, and your machine ID, and you'll be good to go. So any of our products, it can be tested. So for sure, Steven, you can have a free trial. I don't expect people to just buy these products and then yeah, there you go. I want people to like our products and to actually use them. And I really, yeah, you're very welcome, Val. I want people to use our products and like them. And I want to have a nice community where people are happy. So please join our Discord. Drop by on YouTube. Come say hello on our website. So it's very easy to see us. If anyone has any other questions, I'm here for you. If not, then I thanks for spending your time with us. As a thank you, we're offering that 20% promo code. We look forward to helping you on your trading journey. Now I'll pass it back to Thomas. I think. Sorry. How do you integrate it in NinjaTrader? It's Prem. I will. I have a video on that. All right. If you want to join my Discord, I'll send it over. But it's very simple. Okay. It's in the data series. It's super easy. I'll show you. Okay. If you know your product is good, it will be a sell. Yeah. Thanks, Jean-Dominique. Yeah. I agree. I'm just flexing my French with Jean-Dominique. Do you need footprint chart? Yeah, you do. You need the footprint chart. That's what shows the single print. Yeah, absolutely. Yeah. Prem, thank you. Thank you so much. I can answer any of your questions. I'm here for you. No? Okay. Thomas, I think oh, awesome, very informative. I took notes and I will look up your website. Thank you, Thomas. That's very kind of you. Thank you very much, man. Yeah, we can chat anytime. Join the Discord. It's the easiest way to reach me. And if you want to talk to my sister, then just hop on our website and just say hello. She's the one that does it. Jim, the footprint chart is part of the package. Um, of what package? Footprint is I hope maybe Thomas is there to correct me if I'm wrong, but footprint is native to Ninja. On NinjaTrader, you do have access to the footprint chart. That's native to NinjaTrader 8. Is it the same as the volume profile? No, it's not. No, it's not, Steve. Um, like I said, the footprint shows No, it's not. The volume profile only shows the volume. This shows the fight between the two, between the two factions. Well, between the bid and the ask. Okay, so not your own then. My own what? It is listed as a footprint in Ninja. Is it? No, it's not. It's good question, Steve. It's volumetric. It's listed as volumetric. Okay, so Jim, what do you mean so not my own? Yeah, the footprint is absolutely not my. Oh, maybe I was unclear about that. So, footprint is absolutely not our invention. This is not our. This doesn't come from TWC. This doesn't come from our company. Absolutely not. It's native to Ninja. It's a type of chart. It's not from us. So we are using our algo. We are setting the algo in the footprint chart. Okay, absolutely. So, Jim, I totally understand. I'm sorry if I was unclear about that. No, this is not our version of the footprint. We're using Ninja's footprint. So, like I said, they called it volumetric. Steve, yeah. So the best volumetric chart to use is a 5 minute, not a 15 or 30. Um, Steve, I use all of them. So I have it on the 1 minute, the 5 minute, and the 30 minute. So 1, 5, and 30. But my algo is set on the 5. Work on TradingView. I'm not sure if it does. Does it work on TradingView? So to find the volumetric, it's in data series, and then volumetric, and then select 5. That's what you want. Steven, I'm still trying to remember if does the footprint chart work on TradingView. Stephen, please add our Discord. I will have the answer for you. I will figure it out and give you the answer. Please join our Discord if you want to, and we can chat there, and I'll send you the answer. I don't see volumetric in my data series, only equivolume. Really, I'm very surprised. Somasundra, I don't see volumetric. It's not volumetric, it's volumetric, like in one word. I'm surprised you don't see it. It's in data series, yeah. In data series, you scroll down and then usually it's there. Yes, TD has footprint charts now. All right. Thank you, Leonardo. I'm Somasundra, I'm trying to figure out why. I'm trying to look here if I can find it. um Data series and after volumetric. Yeah. Thank you, Karen. Exactly. I see it at the same place, so maybe I don't know. I have it right in front of me, and so if you open a chart, Soma Sundra, then maybe right click data series, and yeah. Appreciate the presentations. Got to run. Oh, thank you, Steve. Thank you very much. Oh, okay. So Ninja or Thomas steps in and says you need the Order Flow Plus package to access volumetric bars. Yeah, sorry, Somasundra. Yeah, you need the Order Flow Plus package to access volumetric bars. Val, thank you very much. Thanks for being here. I really appreciate it. Yeah, you guys are awesome. Thank you. Thanks for the questions. Okay, well, thank you very much. Thomas, should I just close this or do you close it or
Yeah, I'll close with my outro. I don't see any
okay.
other questions coming in here.
Thank you, Sebastien.
All right. Well, I'd like to thank again Max for taking the time to share with us today. Everyone in attendance today will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you will join us in future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of TradeWise Creations and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future events. Happy trading from all of us here at the NinjaTrader ecosystem.